Make a start, please. For those of you who don't know me, I'm John Flint. I'm head of the Department of Regional Planning at the University of Sheffield. Thank you all very much indeed for coming along to the book launch event this afternoon, this evening, and to welcome you to our department at the University of Sheffield. And I'd also like to thank Philip Stafford, Simon Beecroft, Christy Coacher for their help in organising this event. In a moment, I will introduce our colleague and co-editor of the book that we're launching, Professor Tony Crook, CBE. Tony will talk about his book. There will be opportunities for questions, comments and discussion. And then following the end of this session, we'll be moving upstairs to the seafloor to the cafe area, where there will be a drinks reception. The drinks reception will both celebrate the launch of this excellent new volume, and but it will also provide an opportunity to congratulate Tony on his award of a CBE in the New Year Honours List for his services to housing research and policy, and also to the governance of a wide range of charities. Many of you will know Tony well, as he has been and remains a key colleague of our department and the university, and he's made a major contribution to both, and of course the wider housing, planning and charitable communities over a very long and prestigious career. Tony is currently an emeritus professor of town and regional planning and still actively involved in our department. He's a former senior pro-vice chancellor at the University of Sheffield, and he served as a trustee and non-executive director of over 40 organisations during his career, and he's still as active as he's ever been. He is chair emeritus of the Board of Trustees of Shelter, deputy chair of the Orbit Housing Group, director of a regional house builder, trustee of the Coalfields Generation Trust, as well as serving on boards and councils for the Academy of Social Sciences, the Royal Town Planning Institute and the Chartered Institute of Housing. Tony's research experience and contribution extends over several decades, and very much international in scope. It's included work in Europe, China, Southeast Asia and North America, as well as the UK. Tony's recent and current research has covered the supply side of the private rented sector and the use of planning obligations to secure affordable housing. His previous book, published in 2011, was entitled Transforming Private Landlords, and was co-authored by Professor Peter Kemp of Oxford University, and the book that we're launching this afternoon has also been co-edited with Peter Kemp. So the book I have here, which has been published by Edward Elgar, is entitled Private Rented Housing Comparative Perspectives. It's been written by special commissioned international experts and explores the nature and role of private renting, and indeed the increasingly important role of private renting in 8 advanced economies around the world. The book covers a breadth and depth of topics and issues, offering important international insights into the specific issues surrounding the contemporary private rented sector, but I think very, very importantly, linking that analysis to much broader crucial housing and planning policies and wider governance and societal challenges and debates. So there's a lot in the book, and I would now like to invite Tony to talk to us about it.
Thank you, John. When you were saying that, John, I was waiting for the speaker to come through the door, and that's incredibly generous, and thank you all for coming. Colleagues in the department, old friends, if I may say that, former friends, not old friends.
Very old friends.
Right. So let me say, John's already waved the book in front. I just want to dwell on the pictures for a minute, because the book is very much about some very fundamental changes which are happening in the private rented sector, not just in the UK, but also elsewhere. And kind of the images you have of the private rented sector when you were students, all ages, you know, a bit run down, water coming through the roof, landlord not being very cooperative. Now, they've still got those problems, but the picture conveys a rather different image. These are not, so we didn't go find a one representative, but you've got here Isha Station, Fizzy Living, new company that's set up to provide private rented housing, brand new. Netherlands, Madrid, Germany, Denmark, USA, Australia, and Norway. What you get there is a rather different image of the private rented sector visually than you normally had when you see rather run-down houses with, you know, drain pipes falling apart. Those still exist, but what you've got is a significant momentum in establishing modern, well-designed, and particularly designed for private tenants. And so that's the front page of the book. Now, what I want to talk about, something about the origins of the book, I won't go through that. But I want to talk a little bit about why it's relevant to compare the experience in different countries, then present some of the information from the book about the 8 countries we looked at, and conclude with a few thoughts on are there any common patterns and are there any policy lessons. So in terms of the origins of the book, John's already mentioned that, and here we are, been working on the supply side of the private rented for 4 decades. When I started working on the private rented sector, people said, this is a declining sector, there's going to be no career in this whatsoever, go on and research something else to do with housing. But I kind of stuck at it, and I'm glad I did, because it became a rather interesting sector, lots of changes going on. And on that, I've significantly collaborated with Peter Kemp, who's now the Deputy Director of the Blavatnik School of Government, and those of us who helped run the university might like to know that Peter's got a £75 million project to build a new school of government at Oxford from the Blavatnik family, so he's in the middle of commissioning a new building from Herzog and Müller, and of course did Tate Modern. But he still has time to collaborate with me as well as doing that. So I've done a lot of work with Peter over the years, and we've also had the fortune of working with colleagues in the private rented sector working group of the ENHR, and some of us know exactly what that means, the European Network for Housing Research, which of course has lots of members from Australia and the US. And that's been important to Peter and me because it meant we were able to work with a group of country experts in doing this work. In our last book, Transforming Private Landlords, we looked at the government's attempts to create a more corporate sector. The vast majority of landlords globally are individual landlords, not companies, not organisations funded by pension funds or insurance companies. But it's been a long objective of this government and other governments to try and create a more modern form of landlordism with more corporate landlords and more equity funding from pension funds and insurance companies, looking for a long-term income return. And what we did in that book was to explain why it hadn't worked and why creating a new structure of housing provision, colleagues will know that's a phrase from Michael Ball, became extremely difficult to do. So it was very difficult to graft this new structure onto the existing structure. And one of the things that became very obvious when we started to do the reading around that, and we were going to conferences for the NHR, was what we called the English, the British cottage industry, the way we characterise the private rented sector, owned by lots and lots of small landlords. In this country, as colleagues know, the average holding of a private landlord is 2 dwellings. And there are hardly any landlords who own more than 100, so it's very much a cottage industry. And it's a global phenomenon. There are very few countries where a significant proportion of a private rented housing stock are owned by companies or significant investments from pension funds, even though many people argue it's an obvious investment for a pension fund. Long-term income return, rents have tended to increase on average in relation to incomes and earnings to which the liabilities of pension funds are attached. That's why, looking at John, they invest in office blocks and things like that. So there's a key reason to do it, but they haven't, and we looked at that. And so we wanted to look at the global picture and look for similarities and differences in the work. So why do these sorts of comparisons? Well, it's not that no one's done work like this in the past. Indeed, there have been several in recent years, but there hadn't been a study looking at the global experience since the global financial crisis in 2007. And an obvious thing to do was to look at the way in which the market had responded to the GFC internationally, because there was clear evidence, particularly in Australia, for example, and in other countries too, that the sector was changing in response to that crash. And there's evidence of recent private rented sector changes, not only in this country but elsewhere. Another reason for doing comparisons, and I think those people who've done a lot of this, and there are people in this room who've done a lot more of it than I have, is that doing comparisons actually helps you look at your own country more clearly. It helps you shine a light on your own experience. It sharpens up what's special or similar about that. We may find common patterns that might be transferable, and boy, are governments keen on this. Every time I'm in London, which is quite regular, I pick up the Evening Standard on my way back, and there's yet another letter saying the government should reintroduce rent control in London on the lines of the German model. And it works in Germany, people invest in the sector, it's high quality, rents are related to earnings. So if it works in Germany, it should work here. Interesting question. And governments are keen on looking at experience overseas and transferring it in lots of ways, not just in housing policy. But making comparisons and transferring policy is very tricky, because if you don't understand the context, then it ain't going to work. And I would argue against introducing German rent control in England, because it requires an understanding of the context, and the context is not the context we have here. So how do we go about this work? Well, first of all, three things I want to say. First of all, we asked our colleagues in the working group to collaborate with us. We chose to look at 8 countries, including England, and Peter and I wrote 4 of the chapters, but we asked those people who are experts on their own country, Denmark, Germany, Netherlands, to write those chapters for us. So we didn't take the approach of, madly diving into the internet and university libraries and reading about it, fun as that might have been, because we knee-deeply knew their stuff. They knew the data, they knew the context, they could interpret it. And we were delighted that they were happy to do that. We also wanted to avoid what I think can be the fate of these kind of books, is that people write their own chapters in their own way, which is quite understandable, and then we end up trying to see the common themes and common patterns. And so we set out a clear format for how this should be done, including how we wanted them to look at the data, the things that we wanted them to study, and the themes that we wanted them to think about, which enabled us then to draw the threads together. But in particular, we wanted to have some way of trying to understand the context. And we chose our 8 countries to be a reasonable, a purposive cross-section. They're not a sample in the statistically representative sense, of countries which illustrated different varieties of capitalism. So for those who are aware of the literature, we took the Hall and Soskis work on varieties of capitalism, and we chose countries which fell into those categories. So some liberal market economies, Australia, Britain, the United States, some coordinated market economies, and a mixed market economy in Spain. And we can talk about that, John, in conversation, but clearly coordinated market economies operate rather different than liberal market economies. Trade unions really quite important in running the economy. Banks operating at the regional level being drawn into all those threads, and liberal market economies quite differently. We also wanted to look at some countries that illustrated the variety of welfare regimes, and here we took Esting Anderson's work, and so we wanted some liberal regimes, some social democratic regimes, some conservative or corporatist regimes, and some Mediterranean ones, where the approach to thinking about the welfare state was rather different. Sort of residualist, minimalist concept in liberal countries, rather different approach in countries like Germany and the Netherlands. And we wanted thirdly to look at different rental markets, and this, colleagues who know the work, is Jim Kennedy's idea that rental markets are either unitary or dualist. That in unitary rental markets, there's a thinking together about the role of the public rented sector and the private rented sector. Often the private rented sector is subsidised to provide social rented housing. Or unitary. Unitary ones where the two come together, and dualist ones where you've got a rather separate approach. And we thought it was also looking at systems of government, so whether they be unitary or federal systems. So that was the basis on which we chose the countries, and I guess we were saying this would enable us to see if there are any similarities or differences. Were there any patterns emerging? Was the private rented sector evolving in different ways in liberal market economies? Was it being managed and thought about in different ways, say in social democratic countries, from liberal ones? So that was how we went about it, and we're not setting that as a model to be followed, but I think we were implicitly saying people who've done this kind of work have done a kind of Thomas Cook's tour, but we wanted to avoid doing Tony Crook and Peter Kemp's tour, but that's some kind of systematic way of justifying our sample. And there are some interesting themes emerging, as you will see. So, this begins the crux to a bit of it, I guess. And by the way, the colours have no meaning, except that I'm not very good at doing PowerPoint. So here, in other words, social renting is red in some countries, like Bologna, it will be thought of having some kind of meaning. And I've been in Copenhagen and seen all the social housing in Copenhagen, that has some meaning too, so no meanings there. So here we go, alphabetically across our sample, and this is the size of the private rented sector, a percentage of all the stock of housing, round about 2010. Of course, one of the things we have to think about was definitions. What's private rented housing is very different in different countries. But the definition we used was housing that's provided on a market basis by private landlords. So it's not that bit of the private rented sector in Germany, which is essentially social rented housing, for example. So here is the evidence on the different sizes. 5 of those countries display what we call the international norm, where owner occupation dominates rented housing and the private rented sector dominates the rented sector. And those of you who remember Duncan McLennan's classic paper of 1988, where he called that the international norm. Owner occupation dominates renting, within renting private dominates social. And in those 5 countries you'll see that's the case. And only in 2 countries does the social rented sector now dominate the private rented sector. And you can see that in Denmark and in the Netherlands. So that's the current picture. But what about the changes? Now here is, I think, some interesting evidence. And some of you will know this very well indeed. But what I ought to say to my colleagues who haven't lived this for the last 40 years as I have, in many advanced countries, the private rented sector was how we built our cities in the 19th century, and then they declined. Australia and the US are different countries where the owner-occupied sector was always important. But there's been a long-term decline in the private rented sector. But look what's been happening recently. So we've got the last 1980, 1990, 2000, 2010 about, because they've got different censuses and they measure these things in different ways. What we've got here is Australia. Home ownership's the dream of the Australian, but maybe not any longer. So you have a very steady increase in the private rented sector as a percentage of the total stock. Denmark, still declining. Netherlands, still declining. But here's an interesting point. The corporately owned sector in those 2 countries is increasing. It's the stock owned by the individual landlords in those countries which is declining. So you've got to break that onion apart a bit to get that kind of understanding. Germany, one of those countries which is unusual because the private rented sector dominates the stock, pretty stable. I mean, there are some small differences there, but hey, don't get too excited about this because, you know, data differences, etc., etc. Norway, steady increase. Spain, declining very sharply, but now increasing. And in the US, really fairly stable, but some recent increases. So, in many respects, you can say in some countries that long-term decline has bottomed out or started to turn around. Now, where it has, it's not because suddenly people started to build new housing for the private rented sector. So you haven't got a lot of entrepreneurs saying, buy a plot of land, build some houses, rent them out. This is a transfer of the existing stock from the owner-occupied to the social rented sector. So this change here is not contributing to a growth in the housing stock. This change is a transfer of existing stock from either the owner-occupied sector, predominantly is happening in the US and in Australia, and fundamentally in England. Only in 2 countries, really, is there any significant new building for privately renting, and that's in Germany and in the United States. It's not to say there's no new construction for private renting in this country, but it's fairly small scale. So the next slide comes back to the update we did on McLennan's paper in 1998. where Duncan said, you know, this is the international norm. Well, you can see there is some changes, so that, as it were, England is moving across, because today the private rented sector exceeds the social rented sector. So we now have far more of our tenants renting from private landlords than we do from local authorities or housing associations, by a fair margin now. So that's the pattern. So who are the landlords? Well, this comes back to the paper where Peter and I characterised the ownership in this country as essentially a cottage industry. For those who can't, I mean, again, somebody should teach me how to do Microsoft PowerPoint slides. At 69 I can still learn, but I couldn't work out how to get it in the contrast. But the orange are the corporates. So these are landlords who are structured as companies. They could be limited partnerships, they could be real estate investment trusts, and these are the landlords who are structured as individuals or couples, but they're not registered in any way. So you can see globally, it's largely a cottage industry. There are exceptions in the Denmark and Netherlands, which are the two countries where the sector is continuing to decline. And even in the United States, which is extolled by policymakers as a place to go and look, where real estate investment trusts are transforming the private rented sector. Hey, listen up guys, not you, the policymakers, it's only 10%. But that's because they go to Texas and Florida and they see all these new blocks of flats and they're transforming their experience to be typical of the US. Go to New Jersey, you don't see it. And why is this? Because it's lax planning laws, big demographic change, buy land cheap, build high, good returns for real estate investment trust. So, a cottage industry, and the corporates own it when it's in decline. And in Germany, again, vast majority of the stock is owned by individual landlords, many of whom will of course be tenants themselves. So here's the interesting thing in many countries. You will often have, those of you who know Germany well will know, if you wander around the town, there's a nice apartment block, the tenant lives below and the landlord lives above. So you've got a very complicated structure there. Regulation. The regulatory framework covers typically regulation on rent, where it happens, and regulation on security tenant. If you're regulating rents, for those of you who are new to this, you really, you have to regulate tenant security as well, because the two need to go together in some way. Now, when we're talking about strong rent regulation, we're not talking about the rent controls that were introduced at the turn of the last century, particularly in the war period. We're talking about what's been referred to as third-generation rent control, where landlords will be required to fix rents in relation to local indices, and then the rents may change according to the movements in those local indices. Weak rent regulation, by and large, means there isn't any, except by some reference to a local tribunal in certain circumstances. So in Australia, England, Spain and the US, landlords can fix the rents themselves, and there's no fallback mechanism. In some of these countries, the landlords can fix the rent themselves, but if the tenant objects, then it gets fixed by a local index. And you can see that where there's strong rent regulation, there's also strong-ish tenant security, and vice versa. Though in Spain, we have this interesting conundrum where there is weak rent regulation, but strong tenant security, which may pose some interesting questions. And here is a slide. It's not true that I have shares in opticians, but Tim, welcome. Taxation and subsidies. One of the things we wanted to look at was were there countries where the tax system was helpful and supporting investments in the private rented sector and vice versa. And in the book there's a lot of detail, and I've just selected some of the evidence. Now, in almost all countries, well, no, in all countries we looked at, landlords in the tax system are entitled to a set of all the expenses. So they've got debts, they can offset their interest payments, they've got management expenses, they do repairs. So they can offset all of that, and they're paying tax if they pay it on their net rent. HMRC in this country gets about £7 billion tax income from private landlords. There's thought to be a missing few billion, but then I think there are thought to be a missing a few billion in lots of cases. So that's pretty standard. But in some countries, negative gearing is a practice. Now, what do we mean by negative gearing? So if the landlord, having taken all her or his income, is then making a loss, then they can set that against their total income. So in Australia, a very sensible investment is to buy 2 or 3 houses, buy expensive ones, make a big loss, and then you can offset the loss against all your other income, so it reduces your overall tax bill. So you've got a number of countries, Australia, Germany, Norway and Spain, where that's possible. Never done it in this country. Now, depreciation, when you're investing in manufacturing, you are entitled to depreciate your capital against your income. But you're not allowed to do that in this country in terms of depreciating a capital asset called housing. Housing, according to Her Majesty's Revenue Customs, lasts forever, doesn't depreciate, so you can't claim the depreciation as an allowable tax expense. But there are many countries where you can. Australia, Germany, substantially in the immediate post-war years. Netherlands for corporates, Norway, Spain, US now rather limited. Capital gains tax. Most landlords have to pay capital gains tax, but in a number of countries there are arrangements whereby if a landlord sells a property and then uses the gain to buy another one, called rollover, you can do that. And there are other incentives that I won't go into that in detail. Now, what this is saying is there are some countries which look as if the tax system is supportive. In all countries, the tax system is more supportive of owner occupation than the private rented in general. But if you look at the detail in the book, it'll cost you £80 to buy it, so save it in booksellers or put in library requests everywhere. But if you look at the detail, what's interesting, if I had the slide here, which we have in some parts of the book for the immediate post-war period, you'd see a lot more support for private landlords in most European countries. So in most European countries which had coordinated market economies and social democratic welfare regimes, there was a horrendous housing shortage. We had one here too, but they decided to, in a sense, throw the tax system, I'm talking rather loosely, John, and not a very scholarly way now, but they very substantially supported investment in all kinds of rented housing. So when there's unitary rental systems, you have a lot of support for private landlords. Much of that's now been withdrawn. So the very substantial subsidies for German investors in the private rented sector is now much more limited. This is one of the reasons why context is important, and why path dependency is really important to understand this. Very important paper by Kaufman and Kemp in the International Journal of Housing Studies say you really have to understand the history, not just because the housing lasts forever, but in a sense what you're seeing is an echo from the past. It's not like the Big Bang, but we're talking about an echo for practice in the 50s and the 60s. In general, though, our observations are that England on the whole, by the way, we're seeing England because of the devolved administrations we didn't in detail at Scotland and Wales. The tax system and the subsidy system in England has been significantly less supportive than in other countries. So that's some of the background. Hopefully that's reasonably clear. Pause for a point if there are any particular questions. Before I move on and say, well, were there any common patterns? Now the danger of this, of course, is if I want to find a butterfly in the garden, if I look long enough, I'll find it. So I'm very conscious of this. And one of the things Peter and I remember, we sat down for hours and hours and hours and said, are we confident there are common patterns? And maybe if there aren't any, we should produce a book that says there aren't any common patterns. And that's, in a sense, the evidence we need. But in fact, there were some common patterns. One more point. Forgive me. Types of tenants. Very interesting how the pattern of tenants have been changing in many countries. So in Australia, a much broader mix of tenants now than in the past. In Australia, typical private rented tenant grow up, leave home, have a private rented flat while you're a student or an article clerk, buy your own home. And by the buy your own, you can buy one to invest in as well. In Australia, a much broader mix in the past. People stay private tenants for much longer. And the same thing is now happening in England. There's a much broader mix of tenants than in the past. And I can't remember the figures, and one of my colleagues will help me out, but I think the last English House Conditions survey said a third of all private tenants now have children under 16. And that's been a big change. It reflects the declining age of when people buy their first home. And that's, you can see that in a number of countries. So where are the common patterns? Well, so if we look at, there are other slides in the book, looking at the types of welfare regime, the type of rental system, and as well as the type of market variety of capitalism. But so look at the nature of rent regulation. So we're not saying this is statistically significant. We're not saying, this is within the 0.5 significance band, but it's in coordinated market economies. You have strongish rent regulation and strong tenant security. And it's in the liberal market economies we've got weak rent regulation and weakish tenant security. Spain stands out as different. You can probably all think why that's the case, but I'll give you some clues from my own view on that a bit later. What about corporate ownership? Now, it's not high, as we've seen. If we take a cut-off where the stock has 20% more of its owners in the corporate sector, companies, limited partnerships. In coordinated market economies, you've got more corporate ownership. In the liberal market economies and in Spain, it's the cottage industry. I mean, it's also the cottage industry here, but you can see there is a pattern emerging there. The changes in the size we looked at, are there any patterns there? Well, here it's interesting because it's not the coordinated market economies where this apparent growth is happening. It's in the liberal market economies, Australia, England, USA, and the mixed market economies like Spain, where you've got this recent growth. So, coming to an end, John and I hope I haven't overrun my ration of time. Conclusions and lessons? Well, there's not much evidence of a conversion to a common pattern, and when you look at the apparent relationship between different varieties of capitalism, different welfare systems, you would say you wouldn't expect to find that, because there has to be some linkage. Each country's current position is heavily path dependent. So the German system depends a great deal on how Germany decided to solve its post-war housing shortage. There was a very interesting article in the FT 2 weeks ago about a significant change in attitudes to home ownership. So we may be on a cusp of change there. So be very careful about policy transfer. Context understanding is really crucial. So all those people who write letters to the Evening Standard, I'm writing letters to the Financial Times in my doji's, but not to the Evening Standard. But they really have to be rather careful about this. I think there's a danger if the pressure to introduce rent control in London in the way that people want it could lead to some very perverse outcomes if the context is not well understood. Because similar policies can have very different outcomes if they're transferred one country to another. So, big health warning. And when I did a presentation for the first launch of the book at the British Property Federation's annual Residential Investors Conference, I really put that very strongly. And then I realised I was overdoing it as the typical academic saying there's nothing I've got to say that's terribly relevant. But there is. I think we can say rent regulation is clearly not everywhere an investment disincentive. So part of the answer Sally put up is if you regulate rents, landlords fly away. That's clearly not the case, is it? It's certainly clearly not the case in Germany, it's clearly not the case in many other countries. So in some coordinated market economies with strong welfare support, rent regulation appears to be associated with investment. Kind of what's going on here, you might be saying. Well, what's going on here might be this. You're on the asset management committee of a pension fund in Germany, and you're saying, should we invest in this company and buy it, or invest in, take an equity stake in it? Well, what happens if the tenants lose their job? Might not be able to pay the rent? No problem. I'm not up to date on it, but most people who lose their job in Germany get income support for up to 2 years, very close to what they paid in the past. There's a very strong relationship between investment decisions and the nature of the welfare system. So in coordinated market economies where there's strong welfare support for tenants and for pensioners, this isn't too much of an investment risk, particularly where the rents are linked to local indices of repairs and earnings. This would seem to be, not quite as safe as houses. But it also appears to work in countries where home ownership is low and where there isn't the kind of fiscal support there's been for home ownership. So you've got coordinated market economies, strong welfare support, not big tax subsidies for homeowners, and where there's been here in the past, and where there has historically been some fiscal support for the private rented sector. So although I am saying it would not be a good idea to introduce rent control in London the way it's being argued, I'm not saying it's not a good idea to think about some form of rent regulation, because it wouldn't automatically have that negative effect on the market. But the second thing Peter and I are saying is deregulation doesn't always lead to investment. So when the private rented sector was deregulated in 1980, help me out Ed, 9, there was no immediate surge of investment. The sector kind of bumped along for about 10 years and suddenly house prices surged. When house prices were surging, annuities weren't becoming such a good deal, people worried about their pensions, the private rented sector took off as a sensible investment alternative. If there hadn't been deregulation, of course this might not have happened. But deregulation works in that sense of causing a surge of investment in a particular context. Corporate ownership is higher in coordinated market economies, and I've really tried to think that through with you. Is this because welfare support for tenants reduces the investment, the perception of investor risk? Is it because investors take that longer term approach? Stefan Koffner, who wrote the chapter on Germany with Peter, an expert on this, says, well, of course you've got regional banks, they take a long-term view, you've got tradings involved in that, so there's a particular attitude to that. But it's also part of the echo from history, not the Big Bang 18 billion years ago. You've typically got apartment blocks, so if you're an investor, you're looking for, you don't want to buy one house there, because the alternative is an office block. So buying a significant bit of investment makes sense, otherwise the transactions costs are far too high. So the actual stock of housing historically makes a good deal of sense. On the other hand, we're also saying recent growth seems more likely to be amongst the liberal market economies, so a bit of a conundrum here. So what's going on here? Well, of course, it does mean the market will respond much more quickly. It appears to be less risky under certain sets of circumstances, so it is interesting that it's in England and Australia and in the USA where this response has come. I think the fifth thing we're saying in the book, well, I don't think that, we wrote it, so the fifth thing we are saying in the book is that this growth we've seen is partly a response to the world after the global financial crisis. Changing labour markets, immigration, increased difficulties of buying your own home, less supply of social rented housing. Almost universally, countries are cutting back on what they're putting into the social rented sector, and the changing demographics. And if we make a prediction in the book, which we do, I think, in the last paragraph, is that we think there will be continued modest growth of the private rented sector in most countries unless this particular context changes. So in Australia, for example, where there's those of you still helping to run university, there's a much more positive attitude to overseas students. There's a big demand for rented accommodation in the cities with G8 universities in Australia. You've got that kind of context. So final comments. There's no simple relationship between what we see in the sector and public policy. You can give two extreme examples. So at one extreme, you've got strong regulation with fiscal support for home ownership, subsidies on mortgages, no capital gains tax, but not for private landlords. You've got strongly subsidised social rented housing, then you can get the private rented sector becoming a residual sector. It describes the English experience until recently, and it pretty much describes the current Danish experience. At the other extreme, rent regulation which takes account of market trends, relatively neutral fiscal approach for 10 years, can result in a stable or growing private rented sector. And it seems to me it's important from an ethical point of view that a good private rented sector is one where both tenants and landlords want to be. And that's what you appear to have had in countries like Germany. But few countries match these extremes. So most countries you've got to ascribe what's happened to a much more complex range of factors, and history and path dependency is really important in understanding the sector today. So that's a summary of the book. Hope you found it interesting. It's fascinated me for 40 years. I hope my enthusiasm has communicated it to you. It raises quite a lot of questions which aren't really my territory. This is not a cop-out, John, on comparative analysis. But I would think we made a contribution to something which is slightly more clever at framing the question than running large numbers of regression analysis and assuming some outcomes because we looked at context. So, hope helpful, and thanks all for coming.
Thank you very much.